Annuity expectations. So we're going to talk through a couple of different, I call them traps of the annuity industry. And just to be very upfront, direct, I'm not anti-annuity, and I've stressed this in different podcast episodes by any means. I can write annuities if somebody absolutely needed one. I don't write a lot of them. A lot of times annuities are sold, not bought. What do I mean by that? Annuities pay out a hefty commission 9 times out of 10. And whether it's a variable annuity, which is more of a securities-based annuity, it's a portion of that is in the market. That's going to be on the broker dealer side of things a lot of times. Sometimes you can do a fee-based annuity to where they're not paying out such a large commission. And then there's fixed index annuities. So a fixed index annuity is going to be an annuity that gives you a floor. So if the market dropped 30%, you're not taking a 30% hit on the chin. So you might make 0% that year, but what they're going to do is they're going to cap your upside potential. So there is definitely a need for annuities in the marketplace. I would argue that there's not a need for as many that are sold, but a lot of times you can figure out how to get different income streams for your portfolio ultimately in different ways than going straight to buying an annuity. I would argue that a lot of the annuities that are sold, especially back in the 90s, these were variable annuities, and a lot of times they did not perform as they were advertised. So that's my biggest gripe about annuities, is that they don't perform as advertised in certain situations. However, that's not always the case. An annuity is a financial product. So just like life insurance is a financial product, you've got all these different types of life insurance. You've got whole life insurance, universal life insurance, guaranteed universal life insurance, variable life insurance, term insurance. You got all these different types of insurance. There's different annuities. So you got maybe a single premium immediate annuity. You've got a fixed indexed annuity. You've got variable annuities. There's different annuity types, and there's different ways to use annuities in your portfolio. And one of the hot areas that individuals, advisors, financial professionals that only have an insurance license, what they're using fixed indexed annuities for is for a lifetime income stream. That's number one. So it basically says, hey, if you hand over your lump sum of $300,000 or $500,000 or $1 million to us, the insurance company, what we're going to do is we're going to guarantee you a lifetime income stream. So let's just say that $1 million goes all the way to zero in year 17, but you live another 13 years. That company will continue to pay out for the next 13 years, even though the account has went to zero. So for an individual that is risk averse, they don't want to put any money in the market at all. Let's just say they get to age 65, they retire, they say, you know what, I'm done with the market. I just want to see how much this lump sum of my retirement can pay out to me in a monthly income stream. And so there is definitely value to annuities, but as a consumer, you need to understand what that value is to your individual situation. And I highly recommend, there's a book called Michael Kitces wrote it. It's basically a know-it-all book for annuities. I don't have it off the top of my head, but the name of the book is in the back of my book, Divided Money. So I wrote Divided Money as a resource guide, and I listed a bunch of financial books that you can go and, you can buy the book on your own time, that kind of stuff. But ultimately, you have to figure out, do you need an annuity? Because the odds are, if you went to an annuity salesman, they only sold annuities. And this isn't everybody. I know a couple people that only sell annuities. They don't do financial planning. They don't do assets under management. They don't do investment management. They only do annuities. And some of those guys truly do have the consumer's best interest at heart. So I'm not knocking people that only do annuities. I'm not knocking people that only do investment management. What I am ultimately knocking and harping on is the lack of awareness to the consumer, that the consumer does need to know that there's multiple options on the table if you don't want to be in the market. And if you don't want to be in the market, then that's your risk profile. It doesn't matter what your best friend Larry down the road says. If you don't want to be in the market, then cash out, put your money in something else that's not in the market. But you have to understand the risks that come with not being in the market. And maybe that looks something like outliving your portfolio or outliving your income from CDs or bonds or whatever it is. So there's definitely more work that needs to be done up front, mostly in the educational phase of understanding annuity expectations. That really gets into how much time you as the consumer want to spend on learning about annuities. You can learn about the types of annuities, the timing of annuities. That's a big trouble area for a lot of individuals, is they cash out of the market too soon. So, you've worked 30 plus years of your life and you want to go ahead and take your chips out of the market. A lot of times it's not the best decision to take all of your chips out of the market, because you do need a bucket of money that is going to attempt to outpace inflation over the next 20 to 30 years in retirement. So I'm not a big advocate for someone to completely come out of the market. I think there's ways to stay in the market but have a little bit more risk managed approach through certain portfolio styles. There's different options that are on the table. It's not going to be a mainstream type portfolio where you're just going to pay 1%. A lot of times you're going to pay a little bit more than that to get access to portfolios that are a little bit geared towards retirees and managed appropriately, managed towards risk. But you have to figure out, do you need an annuity? Go through the resource book at the end of my book, Divided Money. Look through all those different books that you can talk about annuities. They're definitely going to guide you in the right direction. They might be a little technical. They're definitely advanced. However, this episode is about talking about the traps of annuities, the types of annuities, sometimes the timing of annuities, and then also helping you get an opinion of, do you need an annuity for your situation, and giving you the resources to go and do your due diligence. So that's ultimately what it's about. There is one annuity that I left off the table. It's called a multi-year guaranteed annuity, and basically what that is, it's an insurance company's version of a CD, or a certificate of deposit. So those are there's definitely ways to implement certain annuity types into your overall portfolio. Some funds that you have maybe in tax deferred accounts, some of them may be non-qualified money. You have to figure out what tax account type you have, and then determining which fund or which bucket of money you're going to take and then purchase an annuity with, or if you need one at all. I don't know. So that's ultimately what we're talking about in this episode. It's education, bringing light to some areas that definitely get a lot of bad rap, but ultimately you are the consumer. It's up to you to do your due diligence. If you're working with an individual that says only do annuities, or everyone needs an annuity, or you're working with an individual that says everyone needs to be in the market, it's what's right for your situation. A lot of times it's a mixture of a little bit of both, but you have to figure out what you need to do. And I hope this episode helped. So that's going to be it for the retiree years of the Wealth Steps Order of Operations. We're going to wind down this whole podcast series on the Wealth Steps Order of Operations, and the last topic area is going to be estate planning. So we'll talk about that in the next couple episodes.